Okay, hello everyone, and welcome to this live intraday strategy webinar in SB Trade Desk. Michael Boutros here with you. Great to be here. Minho, Graham, Eileen, great to see you guys in the room, as always. Eileen says, good morning, Michael. Wow, on that Aussie dollar. Glad I didn't take that short this morning. No trigger. Yeah, we'll take a look at the Aussie. So we've seen a little bit of a bounce on these. The Aussie crosses are still my favorite pairs. We'll go over Aussie Yen. Euro Aussie has been the one I've been most active in. Got stopped break even at the rest of that trade yesterday. I'll show you that in a moment. And then we'll go into some of the Euro crosses, obviously. All right. Bear with me one moment. All right, sorry about that. Let's jump right in. So looking at the relative performance so far, here's what the dollar index looks like to start off this session. Oop. I just want to show you the relative performance that we're seeing so far. So Kiwi, CAD, Sterling, Yen, all strong against the dollar and its major counterparts for the most part today, actually. Dollar is the worst against the Aussie. Interestingly enough, this is the Aussie is the base code. I'm sorry, guys. Put the base as dollar. You can see that it's weaker against all its major counterparts, especially that Kiwi, which is up 1.52%. Haven't taken any positions on that. I don't have any setups on that either. But we'll take a look. We did figure out, or we were looking at one pair yesterday, which is the Kiwi CAD. We'll take a look at that. Graham says, can we look at dollar CAD and CAD Yen today? Sure can. Dollar CAD and CAD Yen. All right. Yeah, guys, feel free throughout the session at any point if you need to, if you want to throw out a specific pair you're looking at, feel free to note it on the message board. Also, just a quick reminder to anyone new in the room, top right-hand corner of your screen, you'll see a GoToWebinar camera, picture of a camera. Click on that and you'll take a freeze frame of any of the screens that you see presented on our webinars. All right. So let's jump right in. First things first, we'll go over the report from last night and the euro dollar. So this is a piece I highlighted on Daily FX. I kind of just wanted to put it in view here. Haven't taken any positions on the euro dollar. Been really focused more on the euro Aus, which has given us a little bit more juice. Still got that really nice wide ATR, like 75 pips. We took 20 yesterday on it and then get stopped out of the rest. I'll show you that in a moment. But for the euro dollar, the basic premise and the only thing you need to focus on right now is this consolidation range that we're in. This is the scale chart from last night. We're favoring a topside break, so I'm liking to get a pullback with some long triggers to get back in that trade. Here's what it looks like at this point for the euro dollar. First on the daily. Okay. There's that consolidation feature. It looks like we're trying to make a topside pop here. Remember, the topside targets on the euro dollar, if we do get the breakout, guys, are very clear cut and easy to discern. It's the 100-day moving average. We already tagged that at 109.65. 200 moving average comes in at 110.52, and that converges right on basic trendline resistance off that high from August. So today, if we do see a topside break, that's actually your next resistance objective, 110.50 on the broader scheme. Key resistance is a little bit higher, and that's at 111.20. Okay, that's the 618 retracement of the October decline and the upper median line parallel. So as far as that's concerned, the targets are very clear. We're constructive above the weekly opening range low, which is basically just ahead of 108.10. 108.10, by the way, was also that slow stretch that you made in July. So really nice levels. Momentum just as is in the same exact consolidation that price is in off that December high. So we're looking for the topside break. Here's what Eurodollar looks like on the 30-minute. Again, there's that break, first target. You do have a soft target at 109.83. It's a 786, but more importantly than it just being a basic 786, it's the high that we made for the opening range of January. So the levels are absolutely critical and clear here. I favor buying pullbacks, looking for that stretch right now into 109.83 and then subsequent resistance 110.40, 110.58, where that 200-day moving average is, turns out to be the December high and the 618 extension of the advance off that low. So pretty clean here as far as the euro dollar levels are concerned. Just need a better entry price. You know, I was watching this one all night. You didn't get anything until the open or deep into Asia, or European trade rather, just now on the ADP with that dollar breaking down, moving higher. Interestingly enough, guys, just a quick review. We did get the ADP numbers. Here's what it looked like. 205 was the print versus expectation 195. So it's interesting because you saw the dollar actually move lower on this. You got to keep into account that as the data gets better, it becomes much more difficult for the Fed to do anything because, again, you have central banks around the world which are striving to ease further, where here we're looking to tighten, right? And that divergence in monetary policy is going to continue to drive things, I think, for the next couple of months. So keep that in focus. Obviously, this is just a prelude to Friday's non-farm payroll report, which is a far more encompassing report. ADP only represents the private sector payroll. But don't forget, later today, 9:45, we do get those service and composite PMI numbers, and more importantly, the ISM manufacturing composite. This is the January read, expecting a tick down to 55.1 from 55.3. Long story short, I'm just highlighting this to show you there's a little bit more event risk to go on the dollar. And with what the dollar is doing now, continue to favor the long side here in euro as long as we stay above yesterday's low. But near-term support is still at that 108.70 level, which is, by the way, the yearly open. $2016 open. Oh, okay. Some questions coming on here from Craig. Good morning. Good to see you, Craig. Says, good morning, Mike. I took what I thought was a long trigger on Aussie Kiwi, triggered about 540, going nowhere. Trigger turned out to be a false. I guess your analysis, please. Sure. On Aussie Kiwi, right? Did we cover that one last night? No, I did not cover that one last night. It's Aussie Kiwi. All right, we'll jump right into the Aussie crosses. But first, let me just get through the Aussie dollar. So here's what the Aussie dollar looked like yesterday, and I kind of just wanted to highlight what we were looking at on the intraday charts here. So here's what the radar chart from yesterday looked like on the Aussie. I got fooled too. If you guys read this from last night, I was looking to stay bearish while below that spike high that we made right at 70.50. This to me looked like a clear break of the weekly opening range. Momentum is at its lowest levels that you've seen. There was some divergence there, so I was looking for a rally to sell. That rally came right through resistance and right back up into that 70.67 level. So here's where we are now. Honestly, I'm still looking for short triggers. I still think you can probably go up again to test that upper median line parallel once more. But the long story short, long of it is I'm personally still looking for short exposure. We didn't get any opportunities to get in here. But certainly a nice little rebound here on some dollar weakness, taking Aussie back to the upside. Remember, the broader picture for the Aussie, I still think it rallies, right? We're just looking to play that correction lower to a deeper level here, but it doesn't look like he wants to give it to us. So with that outlook sort of on the Aussie right here, Craig, I want to jump right into the Aussie Kiwi with what you're looking at. Here's what Aussie Kiwi looks like on the daily. Okay, so before I actually get into this, I just want to ask you, Craig, what was the idea of getting long here? Remember, we talked about this last week, or we talked about this yesterday, rather, here in the webinar. This was a major resistance barrier. We couldn't close above it. We failed to close above the 200-day moving average on Monday when we first started breaking down. Yesterday, we closed below trendline support, dating back to the lows we made there on the 15th. So my question to you is just, where were you looking for the long entry here? I'm not sure what the idea of getting long was. In fact, if anything, this was a simple break of the weekly opening range low, right? So this shifts your focus to the downside. These are two targets that we noted yesterday. So at this point, now maybe start to look for a possible recovery, but I'm not sure, Craig, where you said the entry was 106.97. 106.97. Stop below the European low at 106.68. I like your risk to reward there. And what's your target on this, Craig? Divergence into the low. Yep, I'm seeing that. This might be a trigger that you're looking at. It's pretty tight, but that hasn't given out. Let's bring up the 5-minute chart real quick. Aussie key. Oh yeah, building divergence here, absolutely. But remember, divergence in and of itself can continue to go on for hours, days even, before it actually marks a move. That's not a good one. Taking off the high in price. Yeah. So this is what I'll say on this one, Craig. I haven't gotten the actual trigger to go long yet. And you want to just, one other thing I just want to point as a quick point of reference. Remember, when you're looking to play counter trend, we always want to be a little bit lower on our leverage, because I don't think anyone's going to argue this is counter trend for the session, right? We've been mostly weaker since the beginning of the week, actually. Here's the weekly open. So you're looking to call a low here, whatever you want to call it. You have to recognize when you're doing that, Craig. I just don't want you to get stung, man. So keep that in focus. Definitely, I see your risk reward. It makes sense. Really nice area. I just don't have a major low that I'm trading against or a major key level that we've highlighted. In fact, this was the last target. Break below 107.72. There's really nothing until like 106.24. Maybe a soft target here, which is kind of where we're testing now. So we'll just drop that. But just keep that in mind, because if this is a real break, of this formation that we've been in, or that we've been trying to guide price, then you want to be careful, because this thing could just plummet right lower. Now, it just so happens that I'm not, as bullish Kiwi more so than Aussie per se, even though Kiwi's had a really nice run. I do think you get a decent bounce here. And again, just here's a quick reminder of the employment numbers that came out for New Zealand last night. Much stronger, right? 5.3, we were looking for 6.1% uptick in unemployment, actually came in much stronger than expected. Employment change, we were looking for a gain of 0.8, came in at 0.9. Year over year, 1.1 was expected, came in at 1.3. And oddly enough, and this is the caveat, and I think the thing that a lot of people really skated last night, didn't really pay attention to, this is a huge drop in the labor force participation rate. And remember, when you see labor force participation, the broader pool of laborers contract, it will tend to put artificial downward pressure on the headline unemployment rate. So that's why, although this fell to 5.3, which seems yay, this is awesome. This is a very bad issue here, and this is something that the United States has faced as well. Not specifically in most recent reports, but over the past few years, specifically on the back of the recovery, we saw that the labor force participation continued to contract to levels not seen since 1970s. So literally, the same amount of laborers we had then, that's the magnitude of the labor force at this point after the recession. So this is why it'll tend to put artificial pressure, downward pressure on the unemployment rate, make it look a lot rosier than it actually is. With that caveat being said, obviously you saw the Kiwi today with a pretty decent rally, the most sizable rally. If we just take the Kiwi base, you can see that strong against all its major counterparts today, every single one. All right. So Craig is saying his first target is 1075, 107, 107.50. Yeah, I see that. 107.95 would be the second target. So I like your levels, and I'll tell you something. If we get this long trigger to give out, this is what I would do. Again, this is going to get messy at home, but just bear with me. Tack on a quick retracement. If we get that break back above 107.22. 107.95. Choke that up a little bit. Maybe that 107.95 level at 38.2. We just take it to 107.85, and that coincides very nicely with that lower median line parallel. So that's sort of the initial area I'd start to look for targets on this Aussie key. But just keep in mind, okay, just watch this today. If we break over this specifically in the U.S. Open, it would be much more validation for the trade you're in. As it stands, Craig, you got a great risk reward on that one, man. Really nice entry. So I hope that helps out. Let me know if any other specific questions on this setup. Not a bad entry. I just don't want to be, make a habit of trying to call the lows here on the day. But I hope that helps, Craig. On Aussie Kiwi, interesting pair. All right, check mark there. All right, so moving right along. He says, thank you. You're more than welcome, sir. My pleasure. So moving right along with yesterday's piece, we went over the Aussie dollar. Or euro dollar rather. I want to go over the euro Aus, and this is the one that I've been most active in since the start of the week. We went over this yesterday. We got a nice 75 pip bounce on this earlier in the week. Here's what euro Aus looks like so far today. Okay, remember the breakout of this downside formation at support was the premise of issuing alongside earlier in the week. And I've been playing long scalps. Interestingly enough, I actually had a long scalp on yesterday, even though this is lower on the session, which we did manage to book a quick 20 pips on before it turned around. Here's what the intraday chart looked like. And here, do a quick drill with you guys. Just hear what the live scalp chart looked like. Where's Euro Aus? Okay. So actually, I was going to tweet this, but I didn't get a chance to. Here was a quick sort of draw up I did on yesterday's setup. So this is when we took that position. I just took a quick snapshot of what the screen I was looking at, because I know I think it was Eileen yesterday was asking what screens are you looking at when you're getting into these positions and whatnot. Here's what my screen looked like last night. This is the 30-minute chart, which is giving us guidance on the major key levels that we're playing in. You had momentum on the 30-minute coming into support. As far as the price, you had a beautiful risk to reward here against that swing low. You're looking for about 70 pips. Again, I'll show you what happened in a minute, but the risk reward is there. There was the support and momentum on the 30-minute, and here was the trigger on the 5-minute. So you're getting some ongoing divergence, price action making a lower low, the oscillator making a slightly higher low, and there's a trigger break. Okay, now ideally, here's what the live chart looks like now. On that decline off the highs, I just tacked on a quick pitchfork. I'm sorry, guys, this keeps snapping back. A quick pitchfork, and you saw we were right at support. There was that trigger break that we were looking at on this chart right here. So got in a little bit early here, dribbled against us a little bit, no big deal, but you saw some divergence even on that last dip, keep me in the trade. Breakout, that's the trigger break after some divergence, your favorite type of signal. And it's prudent at the first area of resistance to take some off. So as soon as we get into the first area of resistance, whether it's 75 pips or not, I'm going to take off a piece of the trade, bring my stop to break even, and that's exactly what I did. So we took off a piece of the trade right at resistance. This was the exact 50% retracement and basic trendline resistance. Okay, we closed out the trade there. Got that break. I thought I was going to see the rip continue, but it didn't. And late in the night, I came back and stopped this out at break even. But even on a trade like this, right, just goes to show you, even on a day where the market's trending lower, you have opportunities to take these counter trend trades. You just need to be super nimble with them. But I thought this might be a drill that would sort of help you through the mentality of walking through the scalp. Does this help? Does anyone have any questions on this? Thank you for the Euro Aussie breakdown charts on the 5 and 1 minute and your thoughts on how you were deciding while happening. The mentality. More, says Eileen. All right, I'll do my best to bring you more. All right. Craig says, yes, very helpful. Cheers, mate. So again, feel free to take a snapshot of this if you want. Moving forward, so here's where the Euro, or the Aussie rather, Euro Aus is right now. Moving forward, the one thing I want to note is this, and why we took the long yesterday. This is just a basic opening range, Monday, Tuesday. There's the break. Check the opening range as support. Move off. We sat in the opening range and it held again as support. Now, yesterday, when I tweeted out this chart, I noted that you're getting some bearish divergence into the highs. That inevitably turned into a nice trigger break later on after we got stopped out. This is just ahead of the European Open. And that breakdown now came back to the weekly opening range, and we're sitting on that as support. So remember, momentum is holding 40, on the lookout for long triggers. Still be looking for a target. Again, 55, 65 would be the target again. We took that out last night. And then we'd move on to this a little bit more of a key confluence region at 56, 62. So this was the initial, or this was the original where the limit was last night after I got out at half. This was where the limit was. Big region of resistance, 50% retracement of the decline. The median line parallel off the lows, or just the median line itself. And 56.60 also turns out being the September swing lows. See those swing lows in September? So just a real nice area of where you would want to see this thing kind of at least go for a kiss higher up here in Euro Aus. As I noted last night, the bullish invalidation, guys, is going to remain that lower median line parallel. So if it breaks below the weekly opening range high, I'm probably not going to want to do anything and look for short triggers down here. But if it breaks through support, look right back at 53. And that's really been the key region to date for Euro Aus, is that 30, 53 into 53.25. All right, so hope that helps. Again, quick wrap up of the Euro Aus. We covered Euro Dollar. Okay, Gary, good morning to you, sir. Says, good morning, Mike. Do you know who carries out the analysis on DailyFX Technical Analyzer? I use it as a guide from time to time, but can't always understand their options. So Technical Analyzer, Gary, is actually a third-party contributor for DailyFX. I know what you're talking about. That's not actually run by DailyFX. It's a third-party software, so I'm not really sure how those parameters are actually determined. But I've heard good things about the Technical Analyzer. Some people really like it. Some people have had not so good of experience with it. I get mixed decisions, Gary. You found it to be helpful, though. Keep me in the loop. Let me know how that's going. So, Hale, great to see you, sir. Says, could you please check gold and the 4-hour divergence again? Yes, we will. I had gold written down, but just in case, we're still holding below that 200-day moving average. Let's take a quick peek now. We're still holding below that 200-day moving average, and for me, that's the major resistance that you want to really focus on, okay? Likely see some more kickback. The resistance, former resistance, is now support, somewhere around 118, 116 down here. Also, you have that median line off the highs from October. So the 200-day moving average could see some room here for this thing to drop back into this support trigger, dating all the way back to the lows from November. Yeah, 1131, you're right, Sohail. So are you in a position, Sohail, or are you looking to get into a new one? Let me see with 4-hour chart. You're looking at some divergence, huh? Yeah, for sure. You can see the ongoing divergence, for sure. Oh, nice. Some nice wick action up there. Yeah, I do expect you might see some pullback here in gold. Remember we talked about yesterday when we first tagged that 200-day moving average. That's when I was like sort of off the reins for additional new long gold exposure. But you're absolutely right. You are getting some divergence here. I would just caution you, this could take a little bit longer to pan out. This thing could rocket into 1135 and then sell off. but you're absolutely right in seeing that you are getting some ongoing divergence momentum, suggesting that the topside momentum wave is sort of waning here. So sure. The only thing, again, I do want to say, Suhail, is remember, when you're looking at these 4-hour RSI, and this is prevalent on all oscillators, the further you go out in time frame, it's important to note that you need to see the close of this candle to validate any type of trigger. Okay, so that means that you got to wait for a 4-hour stretch. That's half the session. And if you decide to get in at that point, you're likely to be way off, the high or the low already for the session. So just keep that in mind, Suhail. I do like a pullback here in gold, but I'd rather wait for a pullback to get long than try to necessarily play the short from here. Does that make sense? Oh, Sohan, I'm sorry. my apologies. I was saying Suhail, Sohan, I'm sorry about that. Does that make sense though? Yeah, I expect some pullback from here. Stay constructive above 1116. A break higher. Whew, look at some major like further upside here. You have just a sliding parallel here for the dominant slope. Excuse me. But the next major key target, if we do mount that 618 retracement, is 1154. Excuse me. It's a low day close for March, but also ended up being the low day close or the high day close for August, the high close for September, and certainly that'll line up with the upper median line parallel here heading into the close of the week. Remember, we have non-farm payrolls on Friday, guys. So if the dollar gets beat up more, it might be a beautiful opportunity for the breakout here in gold to further its stance. If we get a really strong print and you see some dollar strength, it might give us the opportunity to get a pullback here to get back on the long side for gold. Bear with me one sec. I just want to see what this extension looks like. All right. We're gonna refinagle these levels. Bear with me. So the 50%, since we've kind of sailed through that a couple times. That's what I'd be looking at for now. And look where that 100%, two legs, equal legs up, still takes you into 1136. So that 618 overlap with the 100, my favorite Fibonacci confluence is just higher. All right, so that is gold. I guess while we're on the com block, just a quick peek at what crude is doing. Looks like this. Not much to write home about. 764 retracement takes into 29.15. We just missed that earlier today. Probably get another bounce here, test this former support as resistance, but the long story short, you made a simple two equal legs, 100% correction off the low rather, into major resistance, and we'll look lower while below that basic trendline support, now resistance. Subsequent downside targets, 28.26 is the low day close for the year. And 2618 off the October high takes into 2652, 2674. So quick snapshot, guys. If you need this chart for later in the session, feel free to take a snapshot. Gary says, okay, no, it really kills me regularly. SB Trade Desk all the way. I missed that comment. That's about the technical analyzer, huh? Yeah, again, I hear mixed signals from the client base. Some people love it, some people hate it. I don't, again, this is just my personal humble opinion, but I just don't believe in software that can automatically do technical analysis for you. It's just, if that was the case, then wouldn't be a need for me and Jamie, would there? All right. Mario says, hi, I'm long about 2 hours ago at 154.63 against the London lows, but got stopped out on a check of the lows. Mario, for what pair is this? Euro Oz, Mario? Is that? Yep. Okay. Let's take a look again. But you got stopped out on a check of the lows. So, yeah, I can see that that wick was just below the previous low, right? Yeah, it happens, Mario. He says, it's okay. You already answered my question. No, no worries. I just want to take a look. So that kind of thing happens, Mario, specifically if you have your stops right up against the lows. I try to give myself a little bit of a cushion. Um, but at least that was a really, really tight stop. I'll take a stop like that all day long on a pair that's giving me 75 pips per swing here. So not a bad entry. On your scale charts, when you publish, can you hover the fib extensions more than the retracements in order to see the start, second point, and third point for the reference? Sure, it depends, Eileen, because some of them go back really, really far, and if I zoom out too much, the chart just looks like a mess. Is there a specific chart you want to take a look at? No, just in general. Okay. Okay. I'll try to do that for you. And also yeah, just hovering it like this shows you the reference points. I know exactly what you're meaning. Sure. All right. So we're running a little behind here today, but some great questions. So let's jump right through. We went over euro dollar, euro Aussie, Aussie dollar. We went over. Okay, let's just touch really quick on some of the radar charts that was from last night. So I wanted to highlight this CAD yen. Graham, we'll go over this for you right now, and then we'll take a look at dollar CAD, man. So CAD yen, I just thought you had a really interesting opportunity here because of the formation that we were trading within. So I kind of just eyed this early in the week, these three reference points here for this pitchfork. Wasn't really sure we were going to get, or didn't really have too much conviction that we were in this pitchfork because again, you just made it. You haven't had any touches or tags yet. Turns out it's actually a pretty decent play. So Kiwi CAD looks like on the daily. Nothing to write home about. Here's a 30-minute, and here's what it looks like now. Nope. Oops. Wrong chart. CAD yen. I do want to take a look at Kiwi CAD as well. Where's CAD yen? There we go. Okay. So the bearish invalidation level was 85.84, and that was basically the opening range low for the week and the upper median line parallel. So we were looking for short triggers. We were looking for a rally to sell. Okay, here's where we were last night. It actually probed right below that confluence region of the 236 and the 100% extension. We blasted right through, and this breakout doesn't necessarily have me bullish, but I'm not really necessarily looking to do anything at this point. I'd need a very strong short trigger and a proper stop or a proper high to trade against. You know what I mean? To get back into this one, which is why I had it on the radar chart because I wasn't really sure if we were going to get a play on this today or not. My ideal scenario, guys, was for this to rally right into that bearish invalidation level and to get a short trigger off that mark. So now that we've broken through, kind of puts a dent in that idea. Okay, so that 618 retracement decline comes in at 86.13. Near-term resistance. We'll see if we can't get this trigger to break to actually pan out. But the stop would need to be against the high. So decent ATR, 41 pips, still a nice range here. So we'll keep an eye on this one heading into the U.S. Open. But the ideal scenario is for this thing to have made a break of the weekly opening range low, test it here as resistance, and move off. So we'll see if we can't get this one jiving in U.S. trade. Next on tap from last night, that's CAD Yen. Graham, do you have any questions on CAD Yen before I move off? So dollar CAD, which is something that we talked about here in the webinar yesterday, is starting to look a little bit more interesting for me. Here's what the daily chart looks like first. Okay, and remember we talked about 39.68, 39.80. It's a basic 38.2 off the October low. This is a 618 extension just off the highs that we made. Basic trendline support being tested now off the low from October as well. We're right there. The major key level, and if you guys remember, we talked about this yesterday, is right here. This is the big one. 100 off the high, 50 off the low, 37.49, 37.60. Nice 20 pip range there of support. Also, former basic trendline resistance, resistance, break is right in that region as well. So dollar CAD coming in some major support near term. I wouldn't necessarily stress this any longer. Sorry guys, give me 1 minute. And here's what the intraday chart looks like. So from the beginning of the week, the only thing this thing did was make a basic opening range against that 88.6 at 39.11. So here's the weekly open. We tested a high, made a new low, tried to press the high, failed yesterday. And on this break, below a basic trendline support, here's a break of the weekly opening range low. So objectively, aside from anything I would say or anyone else would say, you'd look to stay bearish sub 39.13. Momentum certainly supports the case. First time you've reached into oversold territory since way back here at the beginning, or towards the end rather, of January trade. And you can see the break below oversold territory here still had a couple of hours to go before it finally started to revive and come back. So I'd be looking for that low at 38.11. I'd be looking for that key support we just talked about at 37, what is that, 37.80, 37.66 for the dollar CAD, but this does invalidate the weekly opening range low. Absolutely. Graham, questions on dollar CAD or CAD yen? He says CAD yen 5-minute agree divergence and trigger, but nowhere for stops. Exactly, and that's something that happens a lot, specifically in this strategy, guys. You get signals all throughout the course of the day. 5-minute, a 1-minute chart. Those signals mean nothing if price is not, either at a high, at a low, or you have a decent stop to take in the trade. So we want to make sure we're not encouraging chasing behavior. All right, Graham. So I hope that helps. We covered CAD yen and dollar CAD. I do have some notes here on Kiwi CAD that I wanted to share with you guys. And the note says the weekly opening range break shifts the focus higher towards 92.35 and 92.68. And here's what Kiwi CAD looks like on the 30-minute. So 92.35 got taken out. Second target 92.68 didn't. So the high was 92.56. 92.68 is a basic 1618 extension off the low. But more importantly, why I thought that'd be important overnight is because you had that confluence, three-way confluence of the upper median line parallel of the formation off the highs and the upper median line parallel of the formation off the lows. So we kind of peaked out right ahead of that, turned around. Bottom line is you stay constructive above this, which is basically the lower median line parallel and that slope support that we kind of just popped above. So I do think you can see some more upside near term with the weakness that we're seeing, or with the strength rather that we're seeing in the CAD today. We wouldn't necessarily try to fight that per se just yet, but just keep that in mind. We're still in this formation, and a downside break of the median line here does shift the focus right back towards that lower median line parallel wherever we are in time. I didn't think it was prudent to put this on the radar charts, guys, just because it does have I mean, it's not a big of ATR as the ones that we're typically looking at, and the range is rather tight. So for the pair, I think we wait and get more juice on Kiwi Cat, but it's definitely in my crosshairs. I've been watching this one since the start of the week. Kind of the go for play here would have been just a break of the weekly opening range. And this pullback overnight might have offered some nice short triggers. But we'll see if we don't hold this formation here on Kiwi CAD. Last but not least, Aussie Yen. I did also want to just touch base on Aussie Yen. It's also a trade we've been following very closely. Again, there was, oops. That's what Kiwi CAD looked like yesterday. And this is what we look like right now. So we stretched just shy of that and turned around. But as I was saying, I do want to just go over really quick the Aussie Yen, another Aussie cross that has been sort of almost textbook. Remember this chart from Sunday? We were looking for the opening range break. Initial break would have targeted the opening range low. The 2015 low day close came in at 84.72, and that 618 extension at 84.12. More importantly was this 38.2 at 83.63, and that's sort of the big pivot in price, as it were, for the Aussie Yen. Here's what Aussie Yen looks like now. Okay, oops. So basically, you took out all those downside targets and just missed that 83.63, 38.2, literally by a couple of pips. 83.70. Okay, so 7 pips on a pair that's giving about 50 pips, 46 pips on a daily average ain't so bad. So you're just bobbling here up against the lower median line parallel. Could see some more upside from here, but you're largely looking for short triggers and holds below 40 in momentum, or below 60 in momentum. So there's a short trigger we can look at there. And now that we've made a concrete low and spiked higher on an opening range break for the session, quick retracement off the high. Doubles up our expectations at that 215 low day close, 84.73. And I'm going to remove everything else just to keep this clean. There you go. Not bad. Not bad. I really wouldn't stress this 50 either, actually. Okay, key near-term resistance for 84.73, 84.72. Bearish invalidation, we'll set that at 85.47 at this point, the opening range low for the week that set this thing off. Not bad. Not bad. What is your thought for removing the 50 on the Aussie Yen? So, Eileen, I don't want my targets too stacked up, because what ends up happening is if you leave every fib on, you leave every rate on, you look and you'll see too many targets. We're getting 46 pips here per quarter of the ATR. So it's pointless for me to stack up targets that are like 10 pips away. Also, look previous in price. Fibs in and of themselves, guys, they are a technical factor that I've used for forever, but we don't just go chasing them blindly, right? And if you take a look at previous price action here, that 50 doesn't really give us a pivot on anything. The 618 does, right? Catches that low, that pivot right here that we made last month. It also caught the opening range low for the week. So that 618 makes sense. That 38.2 makes sense. 2015 low day close. I'll keep that. The 50 really didn't see any pivots there, right? So if that's happening and you're seeing that we haven't seen reaction in price at this threshold before, it's pointless for me to jump out of a trade because of that. So I'm going to go ahead and remove it and keep my 40 pip ATR, 50 pip ATR. Keep it a viable option on the scalps. Does that make sense? Oh, I see it. Same when you're deciding your extension points. Exactly, Minho. We're never just blindly following or trying to attain an extension or retracement. It always adds conviction to it when you look back in price action and see that we've seen some sort of reaction off that level before. All right. Yep. I think you're getting it. Right on. So that is Aussie yen. And that's all the pairs that I had in my list for today. Want to just take a quick gander over at the gold trade. We talked about that. Crude oil, a quick note there. I think we talked about that earlier today too. But just to highlight it, this is going to be a very, very popular trade over the next couple of weeks. Everyone's been talking about whether this gold rebound that we saw originate last month is really going to be the onset of something more significant. It remains to be seen. It remains to be seen. We reacted at a median line parallel. It moved lower. The momentum signature still remains pretty bearish. We haven't gotten any major divergences or anything yet. So this is the first thing you'd start to look for on sort of a reversal play. Okay, a break of resistance trigger, check it as support. See if this momentum holds for 50 break to the upside. Long story short, your barrier of entry for the long bias is still that 3440, 3420 level. The lows from December, 618 retracement of this year's range, and the 100 off the low. All right. Can you take another pair and drill down again for your forward thinking on how you'll look for triggers today? Sure. So let's take a pair that's at an interesting level. Let's see. I do want to see. I've kind of been obsessed with the Euro Aussie lately. Let me see what that chart looks like now. I'm getting spoiled with my 75 pip ATR here on some larger swings. So we'll see if we can't get something here. Okay, so it's way sub the 618 already. The European opening range low comes in at 54.20. Okay, I'm not going to want to do anything on here if it breaks back below. Remember, our bullish invalidation level, or we were looking to stay constructive above 54.40, but the bullish invalidation level is that slope support. So if we break below this, I'd be looking for a long trigger down there. Eileen, if it stays right here, then you have a really clean opening range for US. Just look for a break of this magnitude to get you back into that 56.60. Remember, that's the level that we were looking for essentially on that scalp last night where we got stopped at break even for the rest of it. But sort of this is a trigger I'd have in mind. Try to get a stop if I can against that low and see if we get a turn in price or a trigger to the upside heading into US trade. That's one thing. And this has been the pair, like I said, I've been trading most aggressively. On the short side, guys, I'm just really personally not interested. I mean, if we break 53, that's where I get in on the shorts. We said this on Monday or on Sunday, guys, rather from the Sunday report when we were first looking at getting on the long side here, this is still the the bullish invalidation for me. So I can't really get, comfortable taking shorts on this pair unless it's sub 53. That being said, I'm looking for a pull into support here for a long trigger to get in on this one. Eileen says I got a lot of pips from your Euro Aussie. You're from your Euro Aussie this week too. Thank you. You're the one making the trades, Eileen. I'm just pointing out the levels. They're not my levels. They're the market's levels. We're just finding them, right? Why would you look to short triggers in Aussie yen, not the opposite? Manho says. Let me bring the chart back. So, Minho, here's Aussie yen on the daily, and here's Aussie yen on the 30-minute, right? So we're coming off of this support, basic trendline support, and the basic theme is this: the opening range broke to the downside for the week. So typically, when these opening ranges break, typically you look to play that extension towards the end. So what I mean is, on average, and this is something that you can go back in price action and look. Me and Jamie have done extensive studies on this. Volatility, i.e., tends to rise throughout the course of the week. Typically, Monday is going to be your lowest vol day. Typically, as you get through the week, vol increases. With the same respect, opening ranges play the same way. If the dominant trend is to the upside, typically you'll put in your low early in the week and your high late in the week. If the opening range breaks to the downside, typically you'll put, or in downtrends, typically you'll put in the high early in the week and the low late in the week. So for me, this is a clear break of the weekly opening range. And while we are still in the confines of this ascending formation, for me, I would need to get a momentum trigger back above 60, right, to thwart the bearish momentum picture. And price needs to get at least back above this 84.73 level, which has been a key confluence and a nice pivot in price for sure. Okay, 84.74, 84.73. You're basically looking at the 2015 low day close, and that right now completes a basic 38.2. Okay. Also, one other thing I want to highlight to you is this. Who asked that question? It was Munho, right? Here's the thing. You see this trendline resistance? Channel support also gave us some nice pivots, right? So if this is just a break, support, 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 and then we break back below, only stands to expect that you should see that line offer some resistance here on the way up. Does that make sense, Mano? Sort of the thought process behind it? One other thing you want to keep in mind is what's been going on in broader equity markets. If you look at the markets today, risk is really, really still trading at a, I don't want to say at a premium, but look, here's what it looks like. You had Shanghai, which was much weaker across the board. You didn't see the steep losses that you saw in the back of yesterday's U.S. session, where the market was down, what, almost 300 points, wasn't it? Dow was down like 280 yesterday, 295, excuse me, 1.8%. So you're seeing that Asia had a pretty heavy night. Shanghai, which is the major everyone's looking at, only down 0.38%, but the Nikkei down 3.15%. Looking at Europe, broader Europe, mixed picture, mostly lower across the board. U.S. equity futures looks like this. Looks like we're poised, to open higher. But again, we've seen that reversal where you open the market on the high and start to move lower, just like we did yesterday. We almost closed at the lows yesterday in all of the equity markets. So broader story, what I mean to say, Mano, is when risk is off, typically Aussie yen is one of those plays that will tend to move with risk. I don't want to rely too much on that correlation at this point because we're not really in that risk on, risk off per se. But generally speaking, it's sort of the unwind of that carry trade. So that's sort of the idea behind that. He says, yeah, good. I was only looking at the bounce from the lower parallel. Yeah, don't get me wrong. And again, Minho, this is why I don't give trade by trade guidance, man, because there's so many ways you can play these levels. Absolutely, guys. I want to just make a premise right here. Even though I'm looking for the short side, this is definitely a trigger I would have taken, 100%. This is some not divergence, but you have a 3-point trigger, right? Right at support. Price is testing not only structural support, but you have that key 618. So once the trigger breaks, it goes back, tests it as support, and you didn't even get it to support before it ranked higher. That would be a long position I'd be taking. But at this point, I'd be looking to wrap up that long position, Minho, right? Because you're right back at near-term resistance. So there's a lot of different ways you can play these levels, guys. Some guys will play this short into this support. Other guys will be waiting for that drop to get on this long bounce. I just want you to be cautious. It's always better to trade in the broader trend of, or in the broader direction of the trend. And with the opening range for the week breaking to the downside, for me, I'm kind of looking for a little bit more of a steep drop or a little bit more of a drop lower, possibly in Aussie yen. Again, this is going to be our bearish invalidation level. If we get back above that 85.35 level. Gary says, any views on the abomination would be great if you can. Sure can. Absolutely. You're in the right place, my friend. So the abomination is still doing abominatory things, if I can make up some words. Here's what the daily chart looks like first. Gary says, the trend is your friend until like the abomination, it stabs you in the back, right? Here's what dollar yen looks like. And this is just the kind of thing that dollar yen does, guys. We talked about the 200-day moving average earlier this week. Personally, I didn't know it was going to be quite a reaction like this. And rejection at 16 momentum. Geez. I can just only imagine how many people got chopped up on that move, guys. I'm sorry, guys. This computer's really lagged today. Don't need that. 50. 618. Okay, and 7. So this is what I'd be looking at here for dollar yen. This is for you, Gary. Gary saying, I wear a stab vest when trading dollar yen now. One of those bulletproof vests. Yeah, I don't blame you, man. I don't blame you. So here's what I'd be looking at. First, if this is still operable slope, which I think it is, because although it dates back to the highs they made last year, and you've clearly gone out of this slope and back into it, just look at the pivots we've seen, guys. Same slope as that resistance on the way down for that consolidation to September, October. Same slope on this tag here in late December, came back, tested as resistance before we just broke through. The median line, the actual median line of the original slope, caught the lows that we made last month. So I'm still working with this just as sort of broader pivots. Near-term support, 118.93, 118.82. I just have no conviction on trading dollar yen, guys. It's just my personal on the near term. Jamie mentioned about that 200-day moving average in his report. Yeah, I mean, again, neither of us are real moving average traders, but when you see something like this on a major pair, definitely there's a lot of eyes on it. And a nice move to the downside. Honestly, I really didn't think it was going to be that big of a magnitude move, but at least we're seeing the ATR start to pick up a little bit here in the dollar yen. I think you'll get some decent plays. Let me see what the near-term chart has for us. Yeah, same deal. So that slope, former resistance, now support. And again, just tack on that retracement over the low to find the near-term targets, but feel free to take a snapshot of this if you need. If anything, I'd be looking for settling near 118.90, 118.70, this region here. I'd be looking for some sort of settle, maybe some long triggers for dollar yen, but again, just not my cup of tea here, especially when the opening range is this big on the open. You haven't gotten any type of back and forth price action. If you try to press the long, you're catching a low, you're trying to call the low, and at the same point, if you try to sell down here, you have nowhere to put a conviction stop. So I think this is just a wait and see approach on dollar yen, guys. I want to keep this on the radar. Wouldn't necessarily want to get in, start scalping it intraday just yet. On a slightly longer term, how do you work out bullish, bearish invalidation levels? So it's a level of which, Gary, if it breaks, the technical reasoning for the trade is no longer there. So you just look at the formation, look at the of the trading levels that you're in. So why do we get bullish here? Let me go take a step backwards. I'm at a loss of words here today, guys. Sorry, but Gary, let me take a step backwards. What originally turned us bullish? Think to yourself, what made me bullish on this trade? And when that feature is invalidated, you're no longer bullish. So why do we get bullish? When did this thing turn bullish? Right here. Right here. On the breakout back above the upper median line parallel, on a breakout above confluence with the 38.2 retracement, and a breakout above that upper median line parallel. So it only stands to figure on the way back, as long as we stay above that region, you look to stay constructive. Because what's your classical technical analysis? You break resistance, check it as support, move off, right? So if we break back below that same reason that got us bullish in the beginning, that's going to be our invalidation level. Does that make sense? He says, can you give a quick example? You already are. So Gary, does that make sense? And we do that across all the pairs. So a quick jump through the pairs real quick. We're running over on time here. Sterling dollar did make a break of the final break of the weekly opening range high, and also that range that we were trading in that last final week of January trade. I do want to bring your attention to this basic trend line, median line parallel, dating off the lows from November, same as the operative slope we're in. That comes in just higher from where we are right now. On this stretch, I also wanted to just show you this. It's prudent at this point for us to tack on a quick retracement of that last decline off of the December high. And that puts the 50% retracement right there at that 46.70 level. All right, so you guys know I've been really, really cautious with the sterling, kind of a hands-off approach while we were doing this chop and back and forth fest here for a while. But there's the signal we talked about last week in the recovery above 30. Momentum heading into 50, price action heading into some resistance, more key resistance, 46.50, 46.70. Aussie dollar, we talked about that as well. Checking major support and reversing. Hey, listen, if we break to the upside of that formation that we were looking at, if we break back above this, okay, former lower median line parallel, sliding parallel, resistance, resistance, if we break back through this, well, that invalidates the opening range break to the downside, which turned us bearish yesterday, and it keeps the focus higher, looking for 71.36, 71.70. Remember, we started off the week, guys, on all these Aussie crosses saying we're looking for a pullback early to get back on the long side. I personally thought this was going to be deeper, but now that we've invalidated the weekly opening range break, we're back in that. Now, same strategy applies. Nothing's changed. You need to break above 71.27 to validate the break into, again, this formation continuation higher. Or if it get back below 72.30, I'd get back on the short side, or even short triggers up here, guys. But the problem is this. The one thing I just want to say, guys, is a lot of times I'll have one of you email me saying, Mike, you know, you were talking about this in the webinar. I took the trade, but then I got stopped out later in the session. And guys, some of the charts you guys are sending me, the trades were well within the 26 ATR pip. You just didn't take profit. So we got to make sure if you're initially taking the trade on the premise of a scalp, when you get that quarterly ATR in, you got to do something, guys. You got to do something. So in that case, even when the market goes against you, okay, like it did for us yesterday in Euro Oz, even when the market goes against you, it's not going to hurt. Jamie put out a phenomenal piece on the free side of SB Trade this weekend. I hope you guys saw it. with that old video, Charlie D in it, right? He says the most important thing is that you have enough. Your essential risk management is that I don't get wiped out today. I have enough to bring it to the table tomorrow. Tomorrow is another day, right? So we have to stay disciplined. Even though I think this might go into 72, it doesn't matter. If we took that scalp based on that trigger, that only warrants 20, whatever, 75 pips for the Euro Oz. You get the picture. So just a word of caution there for those of you who are just getting started with the strategy. We'll have to wrap it up here. Eileen says that Charlie video is really interesting. Are there still pit traders? It's becoming fewer and fewer, Eileen. Even Chicago, it's sort of becoming an extinct type of era, the pit traders, but makes it easier for us. So we're right here, right in the midst of it, and then gives you the flexibility of trading right in the convenience of your own home. Anyway, guys, we'll wrap it up here. I'll see you guys tomorrow morning. Don't forget Jamie's midweek strategy webinar today at 1 p.m. Eastern. He'll go over some of the trades that you guys are in currently on the swing side of things and some outlook for the month ahead as we open up February trade. Keys says, thanks, Mike. Still getting to grips with the strategy, but enjoying it. Cheers, Kay. And again, it'll sink in with time, my man. It's like all of the things, just practice, 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 and keep those charts in front of you throughout the course of the day. You'll get a better sort of feel for the type of trading that we're doing here. But welcome aboard, guys. I will see you tomorrow morning. Cheers.